Hi, welcome again to another edition of Market Analysis for today, March 11th of 2025. I'm Gio Bencourt, and this is a recording right about an hour prior to the U.S. session opened by Vantage Markets. All right, well, it's 25 years on from the peak of the dot-com bubble, and tech stocks are plunging. That's a worrying coincidence, but this sell-off doesn't have to go the same way as its historical predecessor. The Nasdaq is down 13% since its record high on December. The index had its worst day yesterday since 2022 as investors fled the so-called Magnificent Seven group of mega-cap stocks and those tied to the wider artificial intelligence trade. However, the signs point to a dampening of the market euphoria around President Trump's re-election and AI hype rather than a broader crisis. The S&P 500 was recently trading at 21 times its expected earnings over the next 12 months, above its 10-year average of 18 times. Consecutive gains of more than 20% over the past 2 years, led by a small group of stocks, have left the market vulnerable to a sudden pullback, more indicative of a correction than the prolonged decline of a bear market. There's still time for interest rate cuts, planned tax reductions, and a potential softening of the trade war rhetoric to bring calm to the markets. History since the dot-com bust is on the side of a brief dip of the 18 times since 2000 that the S&P 500 has breached its 200-day moving average during a sell-off of it has bounced back quickly 11 times. Now, that doesn't mean policymakers and investors should be complacent. Delta Airlines' caution that consumer and corporate confidence is being shaken is a warning that a brief scare has the potential to turn into something bigger. But for now, it's probably still better to be greedy than fearful. That being said, let's take a look at what we can speculate for today's market fluctuation. So we're seeing how the Nasdaq, after making that all-time high of 22,317, it has corrected that 13%, and it took it below the 20,000, which would have been the 10% correction for the market to be corrected, and we are just a little bit lower than, more than 10%, at least that 13%. We're seeing how the market during the London session did continue moving lower, but it quickly recovered and it made a nice pullback, but now it's giving all those gains back. So again, could this just be a blip, or are we asserting ourselves? Were they just taking, profit taking, and that caused this, right? Or are we gonna see another continuation of this move lower? The RSI is completely in the oversold territory, so a little pullback back into its normal range could also be helpful, but again, just take that with a grain of salt. S&P, again, let's look at some levels for the S&P. So this level right here goes back to December of 24. Goes back to July of 24. So the reason I pointed out this level is because this volume cluster that created obviously as a level of resistance, now the market above, so now it's a support level. So that could be something that the market can find that support for the asset, for the contract. So let's see if that will be the case. So therefore, using that level right there, I'm just gonna put my support level right below that, and then use 54.80. Okay, then resistance 56.80 and 57.20. So let's use those two puppies. The Dow. All right, so the Dow 41,400 first level support, 42,200 second. It's basically flattish. It wasn't the green, so is it gonna tank? That's the sense that it gives us. Crude oil making basically a breakout setup, equal highs, equal lows. So will it break out to the upside? Will it break out to the downside? Or will it stay here idling until Wednesday, until tomorrow, which is inventory day? Then we have Nat Gas. Nat Gas yesterday, after making that nice move to the upside, is looking to make another attempt at it. So 440 is going to be my first level, and the 20-day moving average in it. That 20-day moving the upper Bollinger Band is going to be my first level of resistance. Obviously, that high of yesterday is the second one. So that's a target for today. I could be wrong, but let's see if we revisit it. Gold seems to be also recovering after making this double bottom right here. So let's see if it'll do a nice breakout to the upside to the 2950 level. It could be. So buying gold. Silver recovering. Okay, so we have our levels here. It's right above now the 20-day moving average within the Bollinger Band, giving it a nice level of support, dynamic support. Then we have the copper. So copper basically today is basically right bounce off that 20-day moving average. So I'm gonna use this level right here as my second level of support, and then just $4.55 and change. Resistance, I'm gonna leave the upper Bollinger Band as my first level, and then that swing high as my second one. So going long copper, buying copper. Bitcoin, Bitcoin, just another day at the office for Bitcoin. 74,000 just jumps at me for a second level of support. Resistance 84, just a swing high. The second one is going to be 86,000. A lot of volume around that level, so keep that in mind. A recovery of Bitcoin. Then we have the currencies. Euro has finally broken above 109. Let's see if it'll be able to stay above it. So 109 and a half is going to be my first level, and 110 our second target. Just a swing low, first level of support, and I'm going to leave the second level. So continuing with that move to the upside, going with the trend, buying, pounding its way higher. It's right there. So I'm just going to use that upper Bollinger Band as a probable level of support, resistance, and then that 130 second target. So buying, and that will happen as we see that our index plummeting, as if it moves closer to 103, we'll see a nice spike on metals and currencies. Have a great trading day, and I'll see you tomorrow.